Okay, answer this question. Do you know how to trade like a pro and not get stopped out all the time like the other retail traders? Because in this video, I'm gonna break down exactly how retail traders trade versus banks and institutions. So if you want to become a super profitable Forex trader, you need to watch this video. Let's get into it right now. Hey, what's up you guys, this is Irfan here with the Incubator.com and welcome to another video. In today's video, I'm gonna show you exactly, I'm gonna break down everything that how banks and institutions trade like a pro. I mean, they're pro, absolutely pro, and how you can do the same thing and trade accordingly and not get stopped out all the time, and it can increase your accuracy by probably 80%. This is what I can promise you. So if you're serious about this strategy, about being profitable, subscribe to my channel and turn on the notification bell, because I put out a lot of free contents for you. I don't have a course to sell you, and then you get notified super fast. So let's get into it right now, because I want to start with GBPUSD. Trade like a pro, baby. I want to start with GBPUSD, and I'll show you some examples what retail traders are doing that are getting stopped out all the time. What is liquidity, what is order block, what is the smart money concepts strategy. Everything is going to be broken down in this video. I have a separate video for smart money concepts trading a strategy, guys. It's my first video on my channel. I'm going to put a card above this video. Go check it out after watching this video, so you'll have a better understanding of order blocks and smart money trading. So trade like a pro, and now I want to show you exactly what's happening here. I'm in a 1 hour time frame on GBPUSD. So I mean, in a nutshell, banks and institutions trade exactly the opposite of retail traders. So it means that whenever you're buying, you're trying to sell to stop you out. Whenever you're selling, you're trying to buy to stop you out. And there are some obvious reasons and obvious evidence for that I'm going to show you right now. Then the most obvious one is support and resistance levels. Support and resistance levels are the least profitable strategy in Forex. Break and retest is different, guys. I'm talking about regular support and resistance levels. So for example, I want to show you like this example right here that I just drew right here. So let me just do a little bit of replay that I show you exactly what's happening. Okay, so let's say that you wake up, you want to trade, and then you want to trade on GBPUSD. You open up your charts, you see this on a 1 hour time frame, and you want to actually look for a very strong confirmation to whether buy or sell. So whenever you look at this chart, you see that, okay, we have higher highs, higher lows. It's an uptrend market, so I'm not gonna sell. I'm gonna be looking for a buy confirmation, this kind of stuff. And now what you do is that you actually draw this support level here, because it's actually an obvious support level. So let me just put it right here. Then I want to show you exactly. I'm gonna write down everything so you know exactly what it is. So support level, this is what we have right here, support level. Okay, so banks know that you're going to buy at support level, and they know that you're gonna sell at the resistance level. So what do they do exactly if they want to change the direction of the market? So this break and retest is exactly what you can see right here. See, after this, let's say that support level is not here, and I'm gonna actually do a little bit more replay. And as you can see, this used to be our resistance level, that after that become our support level. So it actually broke the structure. So we have a break of a structure here. So it means that this resistance level now become our support level, and now we can wait for a correction and then take our buy position somewhere around here. This is called a break and retest, which actually breaks the order block, not the order block, the resistance line, and then it does a little bit of correction, and then we can potentially take our buy position somewhere around here, as you can see. So this is exactly what happens. See, you can wait for the price to come back to hit this zone, and then you wait for a strong confirmation, then you can actually take your buy position. So, and this is a very strong momentum. It's kind of late, you should have taken it here, and then you can take a one-to-one trade. This is a break and retest, and it's a very textbook definition. However, right now We know that we have a very strong support level here because it's respected. It didn't break into, kind of broke into, but you know, after that we had a bullish engulfing candle, and now you're planning to take your buy position one more time because you know for a fact that this is a support level and it needs to be respected. So let's see what happens exactly. Let's say that you have your buy limits, for example, right here, and your stop loss here, and your target point, and your TP, your TP right here or here. I don't know. I don't want to go too far. I want to go for a 1-to-1 or whatever. It doesn't matter where your TP is. I'm talking about your stop loss because they know where you put your stop loss, and liquidity is money. Liquidity means where you put your stop loss, or where other retail traders put their stop loss when they're buying or selling. So the first definition is liquidity equals stop loss equals money. This is what banks and institutions are looking for. Otherwise, they can't change the direction of the market, guys. They are using your money to manipulate the market, to change the direction of the market, and you're always getting stopped out. They need money to change the direction of the market. So liquidity is a stop loss, is money. So let me just make it bigger, just so we can actually have a better vision. So liquidity, stop loss, money. What is the first thing you can see here when this price tapped into this zone? Where do you think that buyers are going to take their position? Of course here. Of course right here. They're going to enter their trade here. Where do they put their stop loss? Here. So what does it mean? What do we have right here? Liquidity. Because we have so many stop losses. We're talking about millions of dollars, not thousands of dollars. Millions, maybe billions of dollars that buyers actually take their trade here. Mostly newbies, retail traders in general. I don't want to say newbie or advanced. Put their stop loss here, and banks know that. They know that you were waiting for this retest. They know that you want to close your trade here. I took my trade. So let's say that I took my trade here and I close it here. I'm good. I'm done for the day. But we are not the only one who's doing it. Some people want to trade, take their profit here because they know that we have a resistance level here. They've been taught buy at support level, sell at resistance level, and when it reaches resistance level, then sell there, and then again take your profit at support level. And they're always getting stopped out. Oh, Forex is a scam, Forex is this, Forex is that. No, you're getting stopped out because you are liquidity. You're not trading based on banks and institutions' direction. So I'm going to show you what's going to happen right now. If you're a regular, I used to do that for 2 years. That's why I lost over $26,000. My whole investment is gone using this strategy. So I know what I'm talking about. I lost so much money. I blew 3 accounts. And yeah, I was doing the same thing. Sometimes it was profitable, but you know, 80% wasn't. 20% was satisfaction. Like, you know, it was kind of satisfying for me, but that 80% messed everything up. So anyways, let's say that I want to take my trade here, close it here, and then when I do the replay, you see sometimes it happens. This one is our 20% chance that we had here that somebody could take their profit from here to here. Okay, now let's say that you want to sell it, and then what happens that we have a bearish engulfing pattern here. You could take your profit here, and one more thing that I would like to mention is exactly here, this one. See, there's so much liquidity here that is already grabbed by the market. It's already grabbed by the market, and it's already broke into the resistance level. So it means that it's actually going bullish. A lot of people put their buy stop here because they believe that if they trade breakouts, there's going to be a higher chance for them that you know, the market is trying to take the price over here. A lot of people trade breakouts and they put their stop loss exactly right here. So they take their position here, they put their stop loss here, and then after that, the next candle, boom, stop them out because they know that the liquidity is there. And also they know that the liquidity is there. So this liquidity is gone, and see what happens. See, they're trying to trade the resistance level. Exactly the same thing happened. You think that this is the resistance level. You think that this is our resistance level, okay? And what you're gonna do is that you're gonna take your trade, get it stopped out. See how they identify your stop loss? This one worked. Literally, I said 20%. There's a 20% chance that if you trade at support or resistance levels, it works. I'm not saying it doesn't work at all, but there's a less chance, way less chance. And this is what exactly happened. Break and retest, and then if you want to take your position here, it would hit your TP. No problem with that. But the next example is this one here. Now we have a strong resistance level here. Resistance level. And retail traders see this pattern here. They get super happy, they get super pumped, they think that they have a really good momentum. They take their position here, put their stop loss here, and they want to close their profit here because they've been taught that when you're selling at the resistance level, just take your profit at the support level, which is this one here, and we still have profit here, we still have liquidity here. So we know for a fact that the market is trying to reach this level, but we don't know when, and we are not trading on resistance or support levels. And then the next thing they find out is that they get stopped out with this candle. See, the market just stopped them out, like out of nowhere. Boom, done. They grab the money, and there's a higher chance the market goes down right now, or probably goes higher. So let's see what happens. Let's see what happens. I haven't seen that, guys. I mean, I'm just literally doing everything with you. I didn't get prepared for this, but see what happened. See exactly what happened. It has stopped them out first. Oh, sorry, no. It has stopped them out. Like, it has stopped out all the sellers here because they knew that this is the resistance level, and they put their stop loss here, and they stopped them out. Now they have the money, and they're going towards the other direction to stop out buyers. They stop out sellers and buyers all the time. And this is what happened. This liquidity has been grabbed because of this. We had a breakout structure. This liquidity has been grabbed. See how easy they do it? They stop you out. They take the money. They change the direction of the market. They stop out buyers. And again, the same thing happens. The buyers are gone. Now the sellers again. So the sellers put their stop loss here, right? So let me just remove everything. This is how easily they get all the stop loss. See, these two, they're gone. They're all gone. So we have liquidity here, and now we have liquidity here. You need to zoom out, and then you can identify the lowest points and the highest points way better. We have liquidity in these two zones, and the market already grabbed all of them. And now you're probably wondering that, oh, we have a very, very good support level now, resistance level that is now our support level. So it's a break and retest. Let's take it right now. Let's see what happens. Let's say that you put your buy stop here, or whatever, you take your buy position here, you put your stop loss here, and you want to take your position right here. Let's see how it works. I haven't checked it, guys. I don't know what happens. Stopped out because they know where you put your stop loss because of the liquidity. They know that it makes sense that you put your stop loss below the lowest points, and this is exactly what it is. See, this is the lowest points here. This is the lowest points. And if I want to identify, if I want to draw a line to kind of be way more accurate, you'll see that we have this line here. Let me remove this. See, we had a shadow here. This is for grabbing all the liquidity, guys. Trust me. This is for getting the liquidity, making the money. Now, bullish engulfing candle. Now there's a higher chance the market go up. Probably 90%, 80%. There's now a 10% chance that it, just keep coming back towards downside. But I'm saying that the liquidity is already grabbed for buyers. All these stop losses are gone. Now let's see what happens. Again, they did it one more time, and now it's going up. They did it twice. And after this bullish engulfing candle, the market just spiked towards upside. Why? Because they already grabbed the liquidity. That's what I'm saying. Sometimes it works like just a clean break and retest, beautiful, no problem, you take it, you're winning. What about the next time? Because you always should expect that there is liquidity there, stop losses there, and the market has to take it before they change the direction. And they did it twice. They did it one time here, and one time even below, actually below this level here. See? And one time here. They grabbed all the liquidity, boom, it pumped up. after that, and you know that there's a higher chance that you can take your trade here, put your stop loss here, and then your TP here, 1-to-1, done. Sometimes it does it twice for a regular break and retest. This is a break and retest video, guys. I mean, I just wanted to show you the definition of smart money concepts strategy. I have a full video for gaps, order blocks strategy. It's my first video on my channel, guys. Go watch it. And also all my trading sessions, my live trading sessions, I use order block strategy, and this is how I make my profit. I have so many live videos, guys, live trading sessions. Go check them out and see how I exactly trade. And this is exactly what's happening. I mean, the market keeps doing it. Like, they stop out sellers and they stop out buyers, and then this is what it's doing all the time, and this is how it's grabbing liquidity for buyers and sellers, both situations. And we have liquidity here. Now we can give it a chance. We can actually give it a guess that it's going towards this side to stop out all the sellers. Let's see. Yep, it's already stopped out the sellers. If I draw this line here, you see that this shadow has stopped out all the sellers. It has stopped out the buyers, and now it has stopped out the sellers. Easy. That's how they do it all the time. And you've got to be careful that for a regular break and retest like this, you need to be expecting 2 liquidity grab, like sometimes 2, sometimes 3 in the worst case. But I personally experienced 1 to 2 times. They stop you out, and then they give you a momentum to change the direction of the market, which is in this case is toward upside to grab this liquidity here. And now they got it. It's probably going down again to grab this liquidity and this liquidity. It's just, I'm just guessing. But it probably just go up and do higher highs and higher lows. And this is exactly what happened. Again, break and retest. This is the last example that I want to show you. Break and retest. A lot of people probably bought here. Now it's going down. That's what I'm saying. It's going down towards this direction. So this is a bad time right now because it's past, what time is it? Like 20, okay, so this is 9 p.m. The market is super choppy. But see, guys, this is a very good example here. This is a very obvious resistance level. The market, like the price came down, did a little bit of retest, tapped into this zone, came down. A lot of people sell here. Again, the same thing happened. A lot of people sell here, put their stop loss here. They want to take their position here. I mean, they want to take their profit here. And see what happened? They got stopped out. Because this is an obvious resistance level for them, but they don't know that there's so much liquidity exactly above this price, and that's why they get stopped out. And it's happening all the time. Go back test it, guys. Go back test it. Go experience it yourself. If you have any question, drop your comment here. As I said, they are all about probabilities, high probability and low probability. In my opinion, break and retest is the low probability trade. But I'm not saying that it doesn't work at all, like 100% doesn't work. No, I've taken break and retest trades as well, but I'm paying attention to the liquidity, that after the market grabs the liquidity, then I'm entering the trade. So you got to be careful with that, guys. If you have any question, drop your comment here, subscribe to my YouTube channel, and turn on the notification bell. And if you want to trade completely hands-free and gain 8% to 20% profit every single month, I highly recommend you to grab Gold EA Incubator. This is a trading bot that trades gold only, and it has a smart news filter that identifies when the news is happening, so it just stops trading, and it actually calculates the lot size and the risk and everything for you, so you can have a profitable month and consistent profits every single month. So thank you for watching this video, and I'm out.